Hello, good afternoon. It's Adil here bringing you a review of the European markets for the trading session Tuesday, the 6th of April 2021. Be sure to follow me on Twitter where I'm very active. Okay, so in terms of European markets overall, considered to be a gap higher given the post-NFP reaction. Markets certainly have opened gap and gapped higher. So you can see the French CAC here gapping higher, but obviously not moving obviously above in terms of the markets as we are now into the key resistance zone on the French CAC. So monthly chart indicating resistance. Interestingly, which I did highlight as well, I think in my other video, that the Euro USD certainly is into support and is looking to move higher, and that's exactly what's occurred today. We've certainly pushed higher on the Euro USD, as we can see here, 1.1850, although it is now coming into resistance and I am actually short on this index. But nevertheless, we've bounced from that pivot low at 1.17, so 150 pip move higher there in terms of the, even though the post-NFP data certainly has failed to keep the euro at bay, but nevertheless it's triggering a risk off or a sell-off in the actual European shares as well. So if you bring up a chart of Euro GBP as well to give you an insight here. Okay, so you can see a very strong bullish candle here on the daily in terms of the euro, which obviously bodes negative for the European equities, hence the reason why you've seen a sell-off in the German DAX today, given the fact that a stronger euro obviously negates the competitive advantage in terms of the currency for exports, and therefore obviously you're looking at risk off scenario here. Now it's interesting how it's sort of aligned with the situation with regards to French CAC obviously being at the monthly level resistance. Obviously the German DAX, we already know, is super bullish and has broken out in terms of the ECB's QE program front running going on there. In terms of Euro stocks, quickly give you an insight here. Now going on to the monthly chart on the Euro stocks, obviously we've broken out in terms of resistance at present, but so very impressive from that perspective. But nevertheless, that doesn't mean that a stronger euro can't trigger a sell-off in the Euro stocks 50. So again, looking for a potential reversal here. Daily chart, again very bullish, but again any reversal one would obviously expect to potentially buy if you are looking at this bullish pattern in the long term. But as a day trader, my obviously focus remains on the weaker euro, well, stronger euro hurting the export obviously argument, and that's exactly what we're witnessing here. 60-minute chart of the euro stocks, again one would argue this is certainly overdue a correction, and a healthy correction it certainly will be. For now, obviously the gap fill will be your primary target around the 3945 in terms of the euro stocks, and there are a lot of other gaps that are down below in terms of euro stocks, so keep an eye on that. Okay, now in terms of the FTSE 100, let's focus back on this. Now again, I did actually initially I was short. Obviously we had the breakout, so I switched my position. I closed my short position for a small loss, and then I actually took the long position twice today, given the fact that we've broken above the fib 75%. Now, FTSE on the one hand was supported due to the obviously speech by Mr. Bojo yesterday, indicating obviously the UK economy to open up on the 12th in terms of the roadmap is certainly bullish, so that certainly helped. Stronger Chinese data overnight as well, that certainly helps. Obviously the scenario in terms of the US economy and its infrastructure plan certainly helped to a large extent, but the countering balance, or the negative obviously balance, was the situation in regards to Suez Canal opening. OPEC obviously talking into increased output, and obviously the situation with Iran, potential nuclear deal or back to a nuclear deal, which obviously indicates higher oil obviously supply, and then the world oil demand will certainly cut for 2022. So again, a lot of negative obviously variable there in terms of the FTSE, but obviously the bullish scenario was BP shares certainly surging for today 2%, on the argument that obviously stronger oil prices certainly has helped its bottom line and it looks more healthy going forward. Nevertheless, daily chart is very bullish. It's a breakout, so one has to respect this breakout regardless. In terms of FTSE breaking past 6800, the next potential target in a technical chart pattern would be your 6900 zone and higher, unless obviously we have a major bearish candle reversal. So that's something certainly to watch out for, and keep an eye on US equities as well in terms of the next potential move. But from a technical perspective on a daily chart, FTSE certainly is expecting 6900 next, okay, unless there's some obviously overtly bearish variable that negates that obviously argument. Okay, 60-minute chart, again, very bullish. We've still consolidated over previous resistance equal support above 6810. Okay, so very, very impressive to say the least. I went wrong around the 6765, exited around the 6805, 6807, bought the pullback from the 6810, and then closed up for, I think, plus 12 in the end. Nevertheless, given the fact that I gave it plenty of time to brew and obviously play out, and that obviously didn't really produce any major dividends. We didn't break past up to 6 to 900 due to the fact that obviously oil prices were weak. Okay, and also doubts regarding Mr. Biden's infrastructure plan certainly hurting commodities as well. Okay, 10-minute chart, gap levels are below. So again, like I said, any potential slip up here, you are looking to close a gap very quickly around the 6740, and then you got a gap at 6715. So one needs to exercise caution given the fact that the French CAC is now at the monthly chart resistance. Euro starting to go move higher, and Euro stocks, German DAX, extremely overbought. The latest news from France at the moment, they've exceeded the infections past the 30k, and I don't think that was hit since late. So France reports 30,639 people in hospital. First breach of 30,000 since November 24. So we already know that obviously the variants are running rampant in Europe given the lagging nature of their vaccination campaign. And that obviously is boding obviously negative, and that's what caused the actual that's what caused the euro certainly to swoon. It seems like they've got their act together potentially, and that's one of the reasons why the euro certainly has started to revamp or move higher. And nevertheless, that's the scenario, and obviously the QE game, or the talk of QE in this regard, stating that the markets can certainly test and she'll continue to print money. The insanity continues in terms of central banks. They've certainly lost their marbles a long time ago, and obviously we are watching the obviously aftermath right now. Okay, so in terms of the FTSE 10-minute chart, you've got resistance at 6840. Support certainly seems about 6810 to 6800. Obviously, if we fail, US markets collapse, whether the infrastructure plan obviously goes up in flames and fails to certainly pass in terms of Congress. Mr. Biden has obviously basically touted a increase in corporation tax 28%. That certainly isn't positive. My understanding is certainly negative. And also Ms. Yellen has talked about a global minimum tax rate. Okay, that certainly is anti-stimulus, and that doesn't bode well in terms of the markets moving forward. China obviously has raised some concerns in terms of excess liquidity as well. Again, that certainly is a concern. So that's the focus. Any hawkish talk and the dollar goes higher, equities go lower. That certainly is a scenario as well. The Nasdaq, the S&P certainly are looking very, very frothy. Well, the S&P is looking frothy, but the Nasdaq certainly is into resistance. And can the party continue there? I think not. So keep that in mind as well. Again, that's a different video in terms of US market analysis, but that has a instrumental influence on European equities in terms of the gap up and gap lower the following day. I think that's a wrap, folks, in terms of the FTSE. Again, daily chart super bullish. 10-minute chart looks kind of vulnerable. That's probably the best way of describing it. Nevertheless, support is seen at 6800, 6810. And if you move lower, then you have all these previous resistance equal supports at 6790, 6780, 6770. And then ultimately gap fill at 6740, 6730, then ultimate gap fill at 6713. So from my perspective, FTSE certainly is a buy the dip candidate, given the obviously exit out of the lockdown, the vaccination campaign, whether that's going to be successful in the long run in terms of its side effects, etc. We just don't know yet at present. Obviously, we're the experimental monkey of the world, along with Israel, and the Europeans are certainly sitting back and looking at the reactions in the UK population, given the vaccination campaign. So certainly guinea pigs of the world. That's literally what we are on a plague island. Okay, on that note, wish you best. Goodbye now.